You ever noticed every time the world feels broke, people suddenly remember gold exists? Like, wait a second, maybe grandma's jewelry was the real 401k. Gold's that one X everyone swears they're done with until the dollar starts acting crazy again. In 2025, gold's been running hotter than Florida's asphalt in July, over $4,000 an ounce, breaking records while your saving account earns about 45 cents. So today we're diving into the big question. Should you buy gold? Or should you hedge your money some other way like with silver, Bitcoin, or faith in Jerome Powell's coffee intake? Before we start talking about the debasement trade, which sounds like a shady deal in a medieval alley, go ahead and hit the like button. It tells YouTube that you prefer financial wisdom served with a bit of sarcasm. And hey, subscribe while you're at it, because inflation's rising faster than your attention span. Alright, let's talk about this sexy new term the cool kids on Wall Street are using, the debasement trade. Sounds complicated, right? But it's not. It just means I do not trust the dollar anymore, so I'm buying shiny things and internet coins. Historically, debasement meant kings literally watered down their coins with cheap metals. That's like if the US started printing $100 bills on napkins from Chipotle. But today, it's not coins getting watered down. It's your purchasing power. Your dollar used to fill up a cart at Walmart. Now it can barely fill up your gas tank halfway. So investors are hedging, buying gold, silver, and Bitcoin. Basically anything that can't be printed. Because every time the government says, we're reducing the deficit, somewhere in DC, there's a printer saying, yeah, right, buddy. See, gold is the OG of I don't trust the greenback. It doesn't rust, it doesn't vanish in a data breach, and it's survived every empire collapse since forever. When Rome fell, gold still worked. When the dollar sneezes, gold catches a cold, but still keeps breathing. But here's the thing, gold doesn't grow. It just sits there looking pretty, judging your paper assets. So when people say gold protects your wealth, they mean it's the seatbelt, not the engine. You don't make crazy gains with it, but it keeps you from flying through the windshield when markets crash. And in 2025, central banks are buying gold like it's on BOGO in Costco. They see what's happening with the US debt, the global currency wars, and the let's all just print our way out strategy. Central banks are basically saying, we love the dollar, but we love options too. Let's talk about silver and Bitcoin, the other shiny kids on the block. Now, if gold's the reliable, classy date, silver is her wild little sister that shows up at the party in ripped jeans and makes twice as much noise. Silver is cheaper, more volatile, and has an industrial side hustle. You'll find it in solar panels, electric cars, and your cousin's jewelry box. So while gold moves like a CEO on vacation, silver moves like your uncle after 2 Red Bulls, fast and unpredictable. But then there's Bitcoin. Bitcoin is like gold's rebellious digital child. It said, I don't need a vault, I've got the blockchain. Now I know Bitcoin can be scarier than checking your credit score after Christmas. But here's the thing, it's done something wild. It's outperformed both gold and silver over the past decade. What's the catch? It also crashes faster than your Wi-Fi during a Zoom call. Some folks treat it like digital gold, others like a casino. But if you believe in limited supply and you like your hedges with adrenaline, Bitcoin's your roller coaster. So the question is, should you buy gold or anything shiny? Let's keep it real. Gold doesn't make you rich. It keeps you from getting poor. It's not a get rich quick. It's a stay rich slow. Think of it as your financial umbrella. You hope it doesn't rain, but if it does, you'll be glad you packed it. Another option, you could mix it up with gold, the safe anchor, silver, the spicy speculator, and Bitcoin, the I like to live dangerously option. Just remember, Don't throw your whole 401k into gold bars like a pirate. That's called over-hedging and underthinking. A good rule of thumb, 5 to 10% of your net worth in hard assets if you want a little peace of mind. That's your I sleep better allocation, not your I'm retiring next year plan. Right now, gold is hitting records high because investors see US debt over 35 trillion, inflation hanging around like an unwanted roommate, and interest rates doing the cha-cha slide. But here's the twist. Some experts say this might already be priced in, meaning if inflation cools off, gold could take a nap while Bitcoin throws another party. Silver might benefit from clean energy demand, but it's still tied to economic cycles. Bitcoin could double or disappear from your screen before your coffee cools. So yeah, everything has trade-offs. That's why diversification still wins. It's the adult version of don't put all your eggs in one meme stock. So before you rush out to pawn your jewelry or buy gold bars like you're in an apocalypse movie, smash that like button and drop a comment. Are you team gold, team silver, or team Bitcoin today? And if you really want to hedge against my caffeine crashes, buy me a coffee because that's the only asset that's never lost value in my portfolio. This is not financial advice, just a reminder to keep guard over your dollars before they get debased. To support my channel, the Buy Me a Coffee link is in the description, because caffeine is the only commodity that keeps me bullish. Until next time, I am your Financial Watchman, keeping guard over your dollars so you can keep your sanity. And I'm signing out. Bye-bye, y'all.